Hello, welcome to the Crypto Club and Digital Asset Weekly Catch Up on Zoom. It is Sunday, the 13th of October, 2024, and as is always the case, we never quite know what we're going to end up talking about. Really depends upon the audience, what they want to talk about or share. But quite often we'll cover things like Bitcoin, crypto, blockchain, DeFi, NFTs, ICOs, the metaverse, regulation, crypto standards, lots of other things, really. So do stick around. Hope you enjoy it. Even better, come along to a future session. We hold these every Sunday evening, 7 p.m. till 8 p.m. UK time, and they are open to novices and experts alike. So with that, let's see who's going to come and join us today. Gabriella, hola.
Hello, Gary.
Hey, good evening to you.
Evening to you. How are you
Yeah,
doing?
I'm good, thank you. Are you looking forward to another interesting session?
Absolutely, yes.
Yeah,
Yes.
this, this is good. Every week you come along and every week you listen, and there's always lots of things going on. So I hope there's always something that you find
Yes,
interesting
it's
and worthwhile.
overwhelming sometimes, Gary, It's like over this past week, I've been digging a bit more into mica.
Okay,
Yes, and how it's shaping crypto regulations in Europe.
okay,
And it's got me thinking about how these rules might line up with what we're seeing in the US, Asia, and other places.
okay.
So, yes, I'm curious, how do you think
Well,
MiCA could work alongside other countries' regulations? Or
okay.
what challenges might come up in trying to get everyone at the same page?
So let me begin with sharing my understanding of what these various things are. So MiCA is the European legislation around marketing crypto assets.
Mm-hmm.
So in essence, it's around tracking and tracing crypto asset payments, where they come from, where they've gone to. So kind of like how countries have to do anti-money laundering, proof of funds, all this kind of stuff. And MiCA kind of folds into that in a way. So what it provides is for the is it 27 countries that are in the EU now. It gives them some consistency of a framework to operate on in terms of the legislation around that. So I think it's quite good in that respect that it's already laying down a framework for EU countries to adopt, and I suspect that it'll get replicated in other areas. So that there's a lot of similarities with what the UK is doing as well. Um, and I think for what it's suggesting, if I remember correctly, things like what's known as the travel rule. So this is the ability to track and trace where a crypto payment has come from, where has it gone to, and everything like that. I suspect a lot of other countries will be happy to replicate or support that kind of regulation. So I think it's a good foundation, but we'll see. So you've just been joined by Alexandra as well. Hey, welcome back.
Hi.
Hi.
Uh, we're just talking about MiCA, the EU regulation, and how it compares with what's going on elsewhere around the world, right?
Okay, but how these rules might line up with the US rules, Asia rules, and other countries, and UK, for example, as well.
Yeah. So some of them do already. If you think about how a lot of the rules around tracking and tracing of financial payments, so in order to do things like sanction screening and anti-money laundering. So sanction screening is an example. So
Mm-hmm.
how you track and prevent money going between people who are on a sanctions list in some way. So whether that's um, because of the country they're in, so there are certain countries that are on sanctions list, or because they are what are known as PEPs, which is politically exposed persons, so politicians, senior government people, that kind of thing. These all appear on lists, and one set of those lists is managed by is it the US Treasury? I'm trying to remember the exact body that's responsible for it. So in fact, MiCA is kind of replicating what they want anyway, which is the ability to say yes or no to
Mm-hmm.
certain people, certain countries, certain companies. So I think MICA in a way is just reflecting what other countries are looking at anyway. So in terms of the US and Europe, I think there's a good overlap already. I think the interesting one is with the Middle East. So
Mm-hmm.
Abu Dhabi and Dubai in particular are the kind of leaders in the crypto regulatory space, as I would describe it.
Mm-hmm.
And they're both putting in place legislation and regulations that I think is very crypto friendly. Um, and I think from what I recall, they're implementing quite similar rules and regulations around things like traceability and origins and that kind of thing. So I suspect we're going to see a not necessarily harmonization of MICA globally, but harmonization is likely to happen, as in other countries will adopt very similar terms and conditions type thing. Does that answer the question, Gabriela?
Yes,
Yeah.
more or less,
Yeah.
more or less. But
Yeah. Yeah.
another doubt I have about it is because this implies just a stable coin. So are
No,
Bitcoin,
sorry.
Ethereum, and Cardano in as well with these same rules or not, or they are outside?
So first of all, stable coins and cryptocurrencies are nominally different in how they behave, and there is also different regulation being introduced as well. And the reason for that, as I understand it, is Bitcoin on its own. If the Bitcoin network or the Bitcoin ecosystem or the underlying Bitcoin value dramatically changed, then
Mm-hmm.
it won't impact any other currency. It doesn't affect the dollar, it doesn't affect the pound, that type of thing. If you've got a stable coin that is now matched one for one against, say, the US dollar or the euro or whatever, that there then comes the risk that if that stable coin gets destabilized, there's a run on it or whatever, if it's pegged to an underlying currency, then there is the potential that you then affect that underlying currency. And this is what central banks do not like around unregulated stable coins, because it introduces the potential for a government or um, central bank for the currency under its management to become unmanageable. You see what I mean on that?
Mm-hmm.
So that's where stable coins and pure cryptocurrencies are quite different. And so I think governments and regulators are realizing this, that whereas cryptocurrencies, it's an ecosystem, it's all own right. It doesn't necessarily lead to a systemic failure of any other currency. Whereas a stable coin, if it's stabilized against a fiat currency, then there's
Mm-hmm.
fundamentally the risk that it could impact the control and management of that currency. So there's different regulation going into place on that, I believe.
Okay, thank you.
Okay. I've just been joined by LJ as well. Hey, LJ. Whoever LJ is. LJ's frantically reaching for the mute button now. So on mute at the moment. No, they're going to stay quiet for now. So, Alexandra, I don't know. Have you got any interest in crypto regulation and stable coins, that kind of thing, or is your focus more on the markets type thing?
I'm not an expert in regulation. I mean, in this respect, we're trying to launch, yes, we're trying to launch our token, but it's not a stable coin.
Mhm.
But I just I was listening to you, and I think that I need to get more information about on MICA,
Okay.
because it's quite interesting, and I know that people are developing some different sorts of businesses somehow related to this regulation, particularly through tokenization of assets, because somehow it regulates securitization of assets.
Mhm.
And this is quite interesting, and this is the thing to kind of to study. But on my end, I'm not an expert. I'm not the guy who can somehow comment on this.
Okay, yeah, but it is something as well. A lot of people don't necessarily realize that they might be engaging in either activities or projects or whatever that falls within the purview of MiCA regulation. So as you say, if you're doing a token in some way, well, MiCA isn't just around Bitcoin and Ethereum. It's much wider. It's the whole crypto asset market. So yeah, it's certainly worthwhile reading, particularly because the rest of MiCA or MiCA is due to be rolled out by the end of this year. I think it is. There we go. Which means it may be expanding. So yeah, there's lots of things going on with this, and this is where I've just pulled up here a quick, few kind of definitions of crypto assets and asset reference tokens and electronic money tokens. So I guess that the token that you're working on, would you describe that as an asset reference? Because I seem to remember it's kind of inversely proportional to Bitcoin. Is that right?
We call it synthetic token with inverse
Mhm.
pricing to Bitcoin. Yes,
Yep.
and this synthetic pricing is made via Chainlink Oracle.
Hmm.
So what we do some sort of crazy thing because we are sort of capitalizing on Chainlink as a kind of data oracle. And by the way, we don't have any collateral structure behind our token.
Hmm.
And again, we consider it as a big strength because instead of creating some collateral structure, we're creating liquidity structure. And it means that we're developing a token with somewhat unprecedented liquidity because liquidity of the token, our liquidity will be something like 100% of token flotation, which is incredible.
Okay.
And so this is in many instances kind of, it looks like some, so to say, ordinary token, but it's not ordinary token because we are implementing a number of innovations and the things that are not common in the market.
Okay. Because the interesting thing there is what you're describing the token as is what I would say it's an algorithmic stable coin in that it's got a stabilization against Bitcoin in some way. And it's just maintained algorithmically as opposed to actually holding assets and that, which means it does fall within a whole range of regulations, I understand it, around stable coins. So it's interesting in the UK, the UK regulator, their first phase around regulating crypto assets is actually around regulating stable coins. They've done what I would consider to be quite an interesting paper on that already, which they've started it as a discussion paper. This was back in, I think, February of this year. In fact, even older, November, but they closed comments off in February of this year, where they discussed some of these things and about the whole regulation of payments around stable coins and that kind of thing as well. So, yeah, interesting thing.
Yeah, we expect that probably Shortbit, our token, will fall somehow under, so to say, jurisdiction of some regulation, probably stablecoin or somehow related to stablecoin regulation. But we don't bother ourselves at this stage about kind of thinking what kind of risks and what regulations we will have to comply with. The time will show. And moreover, we're speaking to some kind of big firms with big legal departments who we think will help us with assessment of such risks and legal risks.
Hmm.
and kind of a legal framework where we can operate with our token and what we can do, what we cannot. So the story will show.
Okay.
My personal concern right now is about kind of regulation and treatment of a number of major tokens like Polygon or Solana, because we all know that there are a number of lawsuits in the United States again from whoever, from SEC and other people trying to qualify those tokens as securities. I mean, not tokens, cryptocurrencies. They are trying to qualify them as securities, which is tremendous. It's I cannot describe, because I mean the kind of the scope of the problem, because it's real problem that the SEC is trying to actually to kind of dump big projects, big blockchain networks that contributed very much to blockchain technology overall, and especially to blockchain technologies adoption, which is, of course, very valuable. And I think that, I don't know, people somehow have to resolve this issue, and I'm just curious whether there are some, I don't know, some organizations or, I don't know, some associations, blockchain associations, who are addressing this issue, because they have somehow to help SEC to treat this situation, because SEC seems like unable to assess such projects in a proper way. My opinion is that they are not qualified enough to kind of to get into the stuff and to understand how to kind of to resolve this situation. Because in my opinion, they have to propose some plan. Okay, I can accept that, for example, Polygon and Solana were stupid enough to some extent to make some mistakes in terms of on early stages of their development, and they offered their tokens and the currencies as a sort of investment tool. There was a problem about that, but this was in the past, and it's kind of sunk cost. And these are the things that we probably have to forget about looking into the future. I mean, from the point of view of SEC, SEC has to say, okay, we can forget about this kind of problem in your past. Let's kind of create some, so to say, damage recovery plan for the future, for you to improve this kind of problems, to solve these problems, and to go into the future and to understand how your networks will develop in the future, and how you will address whatever concerns SEC has right now. And I don't see any plans for such kind of actions. I don't see any initiatives in this respect. This is really a big problem right now, because, for example, we're considering launching our token. We don't know, either on Polygon or Arbitrum, but we are just trying to understand what problems we will encounter if we will, for example, launch it on Polygon, because Polygon is kind of out of the law. It's kind of where we've got tremendous risks launching it on Polygon, because Polygon might be really, I don't know, somehow prohibited. I don't know. In near future, we don't know what risks do we carry launching our project on Polygon. This is a big problem.
But that's where I find it interesting, because you were commenting before about like getting other parties involved in helping with the regulation and legislation. In actual fact, there is a lot of that going on in the US, but it's not the technology companies who are doing it. So things like I was reading the other day, like see I can pop it up, the American Bar Association. So you think about what you're describing is a legislative and regulatory challenge. Technology is almost irrelevant, and this is why the US, the American Bar, sorry, they're looking at stuff around stable coins, FinCEN, who financial crime network, and that they're doing some really interesting things about considering the legality and the issues around stable coins and that. And it's kind of curious because I think you're thinking of it in terms of helping clarify things from the technology perspective, whereas in actual fact, it's from the legal perspective that needs clarifying. And this is where I find it fascinating that a lot of technology people seem to think, oh, well, the law doesn't exist yet, it doesn't matter. Whereas when you actually look at things like money transfers or e-money licenses, payments, all this kind of thing, the law, and as you mentioned before, securities, the law does exist already. The fact that we're happy to expose these things via this cryptocurrency doesn't stop the law in any way. So that's kind of curious. I'm seeing a similar thing with in Europe as well. The Bank of International Settlements was doing some stuff around stable coins and risks and potential. And again, they're thinking of it from an economics perspective, not from a whether it's Polygon or whatever, but they're not thinking of it from a technology perspective. And I actually think that's correct, because I think once you get regulation which is down to the technology level, it becomes inflexible. So I think legislation and regulation should be based around principles, not based around specifics. Which has been quite interesting. The UK, much wider than just financial regulation, but as a general concept, tends to regulate around principles rather than specifics, and that gives the flexibility. Because otherwise, you carry the risk that you might try and introduce legislation that is kind of aligned, biased, focused on whatever you want to call it, around a particular technology, and then you introduce a new technology. It's like, well, you need to introduce a whole new load of laws and rules in there. Whereas I think it's far better to introduce regulation, which is kind of like overarching and principle based. But that's my thinking in it.
My message is largely following. Crypto is developing at very fast pace. And of course, there are mistakes underway. And my message is that law and regulation has to be flexible enough to kind of to assume these mistakes, I mean temporary mistakes, kind of at specific stages, but providing some opportunity for the projects that have developed over the course of this kind of evolution of crypto industry, to allow these projects to kind of develop further, forgetting about the mistakes that they made ever before. Otherwise, it looks like regulation requires for for every project, for every network to be perfect in terms of legal framework, etc., which is not happening in in developing industry. And we understand that people are trying and doing some new stuff, and they might be wrong about something, and that's normal. If you're trying to develop new things, if you're trying to develop a completely new industry from the scratch, and regulation has to address it somehow. Regulation has to say, okay, you have to have some right for mistakes, but once we all, as a C and network and customers and etc., once everybody understands that there was a specific mistake, it has to be addressed and it has to be improved for the future performance. No, it doesn't have to say that, okay, you were wrong and where to close your project and where to close your network and where and all your commitments or your obligations will go bankrupt. That's not acceptable.
Well, I think it's interesting because I agree that regulation should be designed to enable innovation, not stifle it. Completely agree on that. But it's when you start looking at the principles behind regulation is to prevent harm. Ultimately, it's that the purpose of most national regulators, certainly in the finance sector, is to avoid systemic failure, because obviously you don't want your entire market to collapse, and to prevent loss for consumers. And it's interesting because the regulators tend to set that as very high bar. Whereas I would argue that if your consumer understands that there are risks and that, whatever they're doing, it is, as you say, it maybe still be experimental and proven. There are things that could go wrong in there. Then as long as they are definitely aware of the potential of those risks, then they should be allowed to participate in things that, as you kind of described, may not be quite 100%, because that's how you progress and you develop. But it's kind of interesting. That's where I find it fascinating a few years ago about Ethereum, for example. And Ethereum, you may recall, was a project called the DAO. And the DAO I found really interesting because it helped to disprove a couple of fundamental principles around crypto. And for those who don't know about the DAO, it was there was a feature within software that allowed people to exploit this feature in order to extract funds that weren't theirs. So a little bit like going to a cash point machine, putting your card in and say, give me $200, and it would check your balance, say, yeah, you've got money, here's $200. And then you'd say, oh, give me another $200. Unfortunately, if I remember correctly, the way it was coded, it didn't go back to see if you've still got another $200 in your account. It just kept paying it out and paying it out. So it was a feature, or some might say a bug in the way it's behaving. Now, if you go down the crypto purist, we all make mistakes, blah, blah, blah type route, then you should say, well, that was a valid error, it was a mistake, you've lost your money. Okay, that's just the nature of it. It's exploratory in that. But that's not what happened. The Ethereum Foundation, if I remember correctly, took a vote on it and rolled back the transactions and effectively recreated history, which kind of breached another of the principles, which was that a blockchain-based cryptocurrency should be decentralized in its governance, i.e. there's no central body controlling it, and it should be through consensus and that, whereas it seems it was just a relatively small group of people made that decision. So, yeah, it's kind of interesting. I'd almost argue that with the DAO, maybe the people who lost money should have been allowed to lose money as opposed to having everything refunded. But I wasn't one of the people who'd invested in it, so it doesn't kind of affect me. But I think it's interesting. You're right, the regulation, it can't keep up with the pace of technology. I think that's generally accepted. And so what we need to do is have regulation that is supportive of innovation, allows risks to be taken, but doesn't allow too risky things to happen, maybe. But where the line in the sand is of what's risky and what's too risky is something regulators tend to draw quite a high bar on. So it's an interesting thing. Gabrielle, does this continue to help you with your thinking around
yes,
regulation and that? Yeah.
Mm-hmm.
So it is still all evolving and emerging. And, I'm a firm believer that blockchain, crypto, and everything, it behaves like the aviation industry. And I may have said this in the past that, you think back to the origins of aeroplanes, where in 1903, there was two American people, Orville and Wilbur Wright, who did this little hop of a little airplane, 100 feet or whatever, a Kitty Hawk. And that's a little bit like Bitcoin and crypto and that. It's innovative, it's something completely new. And then what happens is that someone else goes, well, I'll take that idea and I'll develop it. And maybe I'll design the wings differently or something. Or I'll fork the blockchain, that type of thing. And they try that, and it takes off, and it crashes, and the pilot dies. The police get involved, the federal people get involved, the regulators get involved, and they say, "Oh, you can't do this in future. You've got to do all this kind of paperwork and everything." Similar to crypto in some ways of how you get these mistakes being made, and then the regulators say, "We're not allowing that." And then in the aviation analogy, that's where the engineers learn their lesson, they design something a little bit different, and it then works. And then the next thing is the next iteration, they say, well, instead of having one engine, maybe we should have three engines or something, and it takes off and it flies, and they go, oh, that's great, so we'll have five engines or something, and it takes off and it crashes, and again people die, and the police come in, and regulations get imposed. And so if you look at the aviation industry, it's a pretty regulated industry. The joke these days is that an aeroplane's not certified to fly until the paperwork supporting it is heavier than the aeroplane. It's kind of like the jokey way of saying just how regulated it is. But in a way, that's what we get with crypto as well. That we get this, okay, let's let people do those little hops or whatever. But the point at which the SEC says, hang on, this is too risky, or this looks like a security, which means you should be regulated and legislated in this way. And that they get all heavy in there. And that starts stifling the innovation. But the SEC, the FCA, all the regulators, they don't think of it in terms of stifling innovation. They think of it in terms of protecting consumers, or at least that's the kind of claim. So the FCA in the UK a few years ago, they did a consultation paper on crypto derivatives. So the whole concept of not around cryptocurrency itself, like Bitcoin or Ethereum, but having like an exchange traded fund, or being able to have other derivative instruments that are based on crypto, so going long and short and all that kind of thing. And the FCA did.
Our token is, by the way, is clearly a derivative.
Okay, which means it falls foul of the eventual decision that the FCA made in the UK, which is where they took on board the feedback of the community. So they asked general members of the public, crypto enthusiasts, crypto companies now for their comments. I think it was like 97% of respondents were in favor of crypto derivatives being allowed. The FCA disagreed, and they banned crypto derivatives being sold to retail consumers in the UK. So, Alexander, just be mindful that as you accept that your token is a derivative instrument, which is based on crypto, then that means you can't sell that to UK citizens as consumers. But by which I mean, if they're running a business, which is crypto business, you can, because that's commercial, but you can't actually sell your tokens to people in the UK otherwise. Don't know if you're aware of that.
Oh, okay. But you understand. Okay. When I'm saying that our token is a derivative, it's kind of my internal subjective kind of understanding of the asset.
Mm-hmm.
But probably for formal, in terms of kind of formal stuff, it might be qualified as a just token because it's token. It's just ERC20. Yes, it's with synthetic pricing, and it's with a built-in automated market maker. So it just depends. It depends on how a regulator will treat this paper. But on the other hand, probably you are sure that I have to be kind of careful about offering this token to UK citizens, but it's probably UK lose more than ourselves by not allowing such instrument to be traded directly to users, because it's a hedge protection. And if for some reason regulator is saying, okay, to all the people, hey, you can freely trade Bitcoin and other tokens out there in crypto, and for some reason they prohibit to trade a hedging instrument, which is our token. It means that they are exposing, and I would say intentionally exposing people to high extreme risk of crypto without protecting them. And how can I kind of qualify this situation? It's just nonsense. It's weird. It's just bizarre. The regulator who is trying to kind of protect customers, they are exposing the customers to extreme risks without any protection, and they prohibit protection tools in the market.
So this is where the FCA would offer a counter argument. So I just happened to pull up the page on the FCA when they announced that crypto derivatives were banned in 2020. Yeah. So I completely get what you're saying, that what you're providing is a means to hedge against the risk of crypto.
Right.
To which the FCA will have a simple answer. That's fine, just don't trade in crypto.
They have to kind of to promote our project. They have to kind of sponsor our.
They think differently.
I'm kidding. I'm kidding. It's just my ideal world. Okay, but why not? Why not? If you would like to establish kind of reasonably secure crypto environment for clients, for wide public, then you will probably help to introduce new instruments for hedging, for some sort of securitization of the assets, tokenization, etc., that would make this market more transparent, more secure, and free of any abuse. And this is precisely what we're trying to introduce in terms of our token, because it's scalable, it's completely transparent. By the way, we make every effort to ensure that our token won't be classified as a security. Of course, we wouldn't like to kind of to repeat these mistakes that were made, I don't know, by Polygon or Solana. And for this reason, for example, tokenomics of our token is extremely unusual, because no single short-bit token will be distributed to founders. No single token will be distributed to founders or investors, because we are treating this token as a transactional token or hedging token, and we completely, in a way like Chinese wall, we separated this transactional stuff. We are separating from investment tools. So there will be another token which we call governance token or whatever, which will serve as an investment tool, as a kind of investment vehicle. People will invest in this different token to invest in our project, not in Shortbit, because Shortbit will be purely transactional hedging token, and just to ensure that SEC under no circumstances, under no logic, will treat it as a security.
Okay. It's interesting as well that you kind of highlighted the point there that different regulators got varying perspectives as well. So you're right. You don't want to fall foul of US SEC securities regulation, um, but you also don't want to fall foul of the regulation of any other nation of which the citizen might wish to buy your token. And this is again something that I've found fascinating. I've seen this for about 10 years in the crypto world now, that a lot of people who founded crypto organizations initially made the mistake of thinking that crypto regulation only related to where they were operating from, not who they were selling the token to. And that's often missed. So the whole thing of someone might say, "Oh, I'm an Estonian registered company, so US regulation doesn't apply to me," actually is incorrect if they are selling the token to US citizens, and the same with the UK and other countries now. But it does make it very complex for yourself and others, because it means that you don't have to just focus on the regulation of whichever country you're incorporated in, if you're incorporated, but you have to also consider the regulatory landscape of the countries in which you might wish to market and sell your tokens to as well. But it doesn't make it easy, does it?
Yeah, it's extremely complicated. And yes, this is probably another issue where regulators have to take it into account, that it's not as easy. And if they expect that there will be some innovations and there will be some startups who have quite limited resources to deal with all this stuff, they have to be somewhat patient about introducing a wall and kind of enforcing all this regulation that is out there. But yeah, sure, we will have somehow to deal with this, and we have to perfectly understand where we're marketing our product, to whom, under which jurisdiction, under which regulation. Yes, it's quite complicated, and we don't want to have any problems with whatever regulator, and in particular with SEC or FCA. Yes, that's why we will probably start with some kind of, so to say, neutral jurisdiction where there is kind of least regulation in our respect. But again, we're collaborating with big firms, and we hope that they will help us to go into kind of highly developed and regulated and respectively regulated markets, and they will help us with solving all this legal stuff and all this regulatory stuff.
I think it's a fascinating area. That's why, when Gabrielle asks questions about regulation, it always kicks off really interesting discussion there, because there is a lot more complexity. And I feel the frustration, absolutely, of innovators who, just want to develop new things, experiment, this kind of thing, and they can't, or they're limited in some respects because of the way the regulation is constructed. But equally, the regulator will then say, well, it's our job to protect people, and the whole idea of, oh, yes, but it's only a small firm and they can't afford blah, 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 blah. I guess it's a little bit like going back to my aviation analogy of, it was all well and good in 1903 of what was effectively two bicycle mechanics, if I remember correctly, developing the first aeroplanes. But there's a point at which, when you are now using the aeroplanes to carry passengers, or in crypto's case, to carry substantial wealth or funds of people, then you actually can't afford for instability or failure, just because it's a small company. As sad as that is, and as difficult as that is, because you are dealing with people's livelihoods. And depending upon the regulation. That could be that an old person who's retiring who thinks, oh, I'll put some money into this because it's a good hedge against whatever. You could potentially have like a smart contract failure, so something which is relatively almost inconsequential, but the has a dramatic effect where it drastically affects the price or the stability, and they've suddenly lost their life savings. Regulators and politicians don't like that, because they don't want to be in charge of an environment where someone loses their pension or their life savings or whatever. And so that's why they'll go for the somewhat heavier regulation rather than the innovation. So that's where I hear what you're saying, Alexander, but I sense that the regulators would say that their obligation is to the consumer, not to the innovator.
Yeah,
hopefully there's some flex in between both.
Yeah, but state officials or regulators, they, of course, they don't like risks, any risks.
Yep.
And what they are trying to kind of prevent, to introduce any new risks to whatever kind of area they somehow govern. But we have to understand that there will be no new development, there will be no innovation without any new risks, of course. And somehow you have to deal with this. And my opinion is that there have to be some sort of kind of micro jurisdictions or some special, so to say, zones. I would call them sandboxes. Like,
Yep.
for example, Cambridge will call itself, for example, the zone kind of free crypto innovation. And in such zones and crypto sandboxes, they would contribute greatly to kind of innovation, and everybody would kind of, in respective jurisdiction, would understand that yes, there is a risk about this innovation, about this technology in particular, in this particular jurisdiction, but it would allow to kind of to tune the technology while understanding that the scope of potential problem is somewhat limited to this particular jurisdiction and their particular residents for some reason, because they might just like these risks and this kind of type of technology. And once there is some kind of some technology will develop, evolve in kind of in the way of evolution of respective development, then respective experience could be expanded on, I don't know, on wider jurisdictions, on wider on the whole country, etc. And but unfortunately, I see that there are no precedents of the kind, and I know that Wyoming is trying to be kind of advanced in terms of crypto adoption, and they're adopting a new crypto regulation, developing themselves as a kind of crypto-friendly jurisdiction. But still, it's not clear to which extent you can kind of open a business and to which extent you can freely operate in this particular jurisdiction. But if, for example, such sandbox would be created in UK, that would probably help overall adoption of cryptocurrency, and just it would create an opportunity for business to more or less freely kind of experiment with different technologies, with different approaches, without being afraid that you will kind of break whatever kind of infringe whatever regulation, and you will be, I don't know, get liable for this.
I guess it's interesting that the UK FCA does actually have its sandbox program, which is or was all about pushing the boundaries of financial regulation. And some of the companies who took part in that or were taking part are crypto related. So certainly there's an opportunity to do kind of exactly what you described earlier, kind of experiment, but within the confines of a regulatory perimeter. And then you've got the likes of Liberland, which for those who don't know, Liberland's quite an interesting place because it's kind of a tiny little country tucked away between, I can't even remember geographically exactly where it is now, but they've actually, it's a tiny little country that has got its own cryptocurrency. It uses its own blockchain. It's got the Liberland dollar, and they're trying to explore and push boundaries in there. And then also you've got Montenegro. So Montenegro's been doing some stuff around crypto space, and I think is it Monte Libre? I think was the specific thing within there, where they're developing an entire ecosystem which is crypto based, or which utilizes crypto. And this is where I think all of these things are quite interesting, and like you say, that they're providing a kind of a regulatory sandbox, but almost at a nation level, whereas the FCA is creating a sandbox within which a small type thing can take part. We've got Ken's joined us. I just wanted to bring Ken in on the conversation as well, because Ken, you're doing stuff particularly around Ethereum related things. We've been chatting about crypto regulation, which is a hot topic of late. And we started off with things like MiCA and the FCA's position on crypto derivatives.
Well, I mean, sorry, I've been watching the football, but I personally believe that MiCA, in terms of pushing forward the innovation of crypto within Europe, it's not going to really help it. It's going to be just an also country. I think other areas where the regulation is not as restricted are possibly going to go further out. In fact, I was speaking to, I told you last week I was going to go to Zebu, that conference.
Yeah.
I was speaking to a couple of people who are very within or working with Namada, the decentralized bridge. And it's not live yet, so they're still doing testing on it. But what they essentially, from what they were saying, is they took the learnings from a lot of the, what can I say, crypto that have been closed down for one reason or another, and decided it needs to be truly decentralized from day one. And what they're building, we'll see how it works out, but it is in how they're basically pitching it. It's truly truly decentralized from day one. And we had a look at, I mean, we had somebody here, I think a few weeks back, who gave us a good overview of it. And so it was good to see at the conference a few more people giving me, and obviously others, a good overview of it. And such a project can never be funded and can never be allowed. There's no sandbox or anybody who will ever accept such a project. And that's basically crypto at its core. And these are the kind of projects I think that will push crypto forward. Then you've got what I call institutional projects. They will come through sandboxes and they'll come through the kind of regulated entity. But even with MiCA, it's a lot of there's a lot of complaints already coming from stablecoin providers, because there's so much restriction in how much or how many transactions they can use and so forth. I mean, stablecoin is not really a big. I don't really know a lot much how they work in terms of regulation, but yeah, there was quite a few people not happy with that But in general, there was also a lot of companies out there who loved it. So
Okay.
it's one of those things, only time will tell. There was a lot of companies building and say they absolutely loved the fact that they've now got something that they can look at and build within. So it was basically interesting.
That's good. I'm sorry, I was just while you're chatting for Alexander earlier, I was looking at the UK FCA's latest position around crypto and sandbox and that, because they announced it a while ago. I hadn't realised, they actually made an announcement 2 weeks ago. They've actually got a thing now they call a digital security sandbox. So that allows an opportunity to look at things like crypto and DLT specifically, where they're using that to explore things. If they look at that as a way of enabling these things, that could be really good. But yeah, so any little lessons from ZBooth worth sharing, Ken?
Well, I mean, one of the main things, there's a lot of projects building with regards to security that were there. But I mean, the one thing about Zebra this year, just like last year, I think there was more VCs than actual projects.
Actually, that's interesting because usually it's a lot of companies looking for VCs as opposed to a lot of VCs looking for companies.
Yeah, I think it was like, I think I'd call it a 60-40 split in favor of
Okay.
VCs looking for companies. But there's a lot of companies building in terms of security, identity, and that kind of thing. A lot of companies building layer 2 stuff, which is extremely good. I went to the book launch of Professor DiMatteo or something like that. He produced a 700-page, literally reference book. So if somebody's going to be setting up like a module, a university module, they've got now a reference book that they can actually reference. I mean, so that was interesting. Apparently, there was nothing like that ever existed, which was a bit odd. So it was, yeah, I mean, overall, I'd say it was definitely worth attending.
Oh, good. It's one of those things as well. Sometimes you go to these things and it kind of feels as though you've heard it all before, but there's occasionally like a little nugget of something new coming in, or it validates what you've heard already. I always find it interesting on these chats where we talk about some stuff and someone says, oh yeah, there's this really, really new thing coming up, called Sonium and linking in the metaverse and that kind of thing. And it's lovely to be able to say, actually, we talked about that about 6 or 8 weeks ago. A bit like you're saying about how someone was talking about one of the blockchain projects earlier on. So yeah, there's still lots of things happening in this space, which I find great. It'd just be nice if things actually gathered a bit more pace at times. Well, fascinating to hear
just to say that
VCs.
Some things never change. I think the most what can I say, most crowded kind of like speech was Raoul Pal. He likes to talk about how you can make money from whatever tokens you hold. His was like, I think, the most crowded kind of presentation, because obviously every degen in the world wanted to go and listen to him. So some things never change. But in terms of a lot of new projects and a lot of like mature projects that I'd seen about 3 or 4 years ago and I thought had died, seem to now have their products ready. So, which is very interesting.
Well, maybe that's it. Maybe a lot of companies just went into kind of like stealth mode and just hunkered down and got on with actually doing stuff, as opposed to talking about doing stuff. So, okay. Well, Ken, maybe that's a good time for us to finish then, because we're just about on the hour. But that's really, really interesting insight. Particularly about the VCs and about how there are so many. That's actually quite encouraging, I think, because that means that there's potentially money out there if you've got the right project and the right opportunity. So thanks for sharing that. So folks, gonna have to close this off now because I like to finish on the hour. But Ken, thanks for the contribution there, really interesting. Alexander, great conversation. I love the different perspectives there. So sometimes we've got different cultures and different norms, and it's great on this session to be able to get the varying perspectives. And Gabriella, thank you for starting that conversation off as well by asking the kind of simple question around Mica and its developments now. So folks, thank you very much for joining us. For those who are watching the recording, don't watch the recording in future. Come along and join us instead every Sunday evening. Have a great one, folks. Have a great day.
Thank you.
Cheers. Bye.
Bye.